I'll be honest, I initially had some reservations about this strategy, but seeing its results over a 20-year span has given me a new perspective. It continues to deliver solid performance even today, and you'll see that reflect in its equity curve, which shows a consistently upward trend. Hi, my name is Volker, and in this episode of Trading System Lab, I'm diving into the EOM system, a trading strategy that works at the end of each month and has stayed strong through many years of market up and downs. Here are the rules. You enter a position 5 trading days before the last trading day of the month. You exit the position 2 trading days after the start of the new month. Very simple. I'll show you exactly how to create this. So the first thing we want to do is go to new strategies, strategy by building block. And then we say if indicator compares to value, we drag this over. And here we change it from the standard setting to trading days left. And what we want to do is we want to use the trading days left for the end of months. So we say if this is equal to 5, then we're going to buy. The sell at market we're going to delete because we want to use the sell at close, which is a power pack feature, as you can see here. Something you can either buy or you can use the premium subscription, then all the extensions are included. You don't have to buy them individually. So here we say sell next bar at market close. We drag this over and we use the same rule, indicator compare to value, drag it over, and this time we use trading days not left but since. Again we use the monthly, so since monthly, and then we say if this is equal to, and here we say 2, so if it's 2 days, trading days, then buy next bar at close. That's how simple it is. Under strategy settings, you define which market you want to test your strategy on. It could be a single symbol or a portfolio. In my example, I'm going to use the S&P 100. So each stock of the S&P 100, I'm going to buy 5 days before the end of the month and sell 2 days after the beginning of the month. And I will always use 1% of the overall equity for the position size. Something I always like to do is to clone this strategy. On the left we see the strategy I was working on, and on the right it's a cloned strategy. It is not saved yet. I can do changes there, I can play around with it and see what effect little changes might have. And this will have no effect on my original strategy then. On the left you see the profit was much higher than on the right side. It is the same strategy. I just made one change in the backtest settings. Since the exposure is 32%, what do I do with the money at the rest of the time? Let's collect some interest. By clicking this button, I apply the US Treasury for 1 month. This interest adjusts over the years. Even though it is not related to the strategy, it increases the position size every time the next trade is entered. A small change with a big difference at the end. Here are the 2 equity curves, the left side with the interest rate and the right side without the interest rate. And here is the drawdown. I mean, all curves look similar but have a big difference. Obviously, they both have the same entry signals on the same symbols as you can see on the left and on the right. Let's take a look at the figures. The annual return was 8% compared to the buy and hold, which was roughly 6%. So that's about 33% more on average. There were over 29,000 trades, which is a very high figure, and the average profit was 0.62%. That's a very good figure. The drawdown was only 22%, which is 60% less than the buy and hold. And interesting, only 55% of the trades were profitable. Don't forget to register to our free webinar where I show you strategies and how to use WealthLab. What do you think? Would you trade a strategy like this? Here are the results for the week that I published the strategy. Looks good, 1.35% up already. Thanks for watching and test smart, trade smarter.